Welcome to stock market hell. Well, not quite yet, but by the end of this week, it might look something like a stock market hell in the stock market, or potentially we could confirm a bottom for 2022 and start to make that move back to the upside. Now, it all depends. A lot of it depends on the Fed, and we're going to talk about what would piss the markets off this upcoming week, aka what to watch out for more downside, or what would make the markets really go through a euphoric event, potentially a euphoric rally. We have really sold off a lot throughout 2022, and a lot of stocks are down dramatically still, and that could set up for a major rally. So we're going to talk about everything you guys need to know about this upcoming week in this video, but I also want to talk about where AMC stock fits in the middle of all of this, if we have a bullish week or if we have a bearish week. So we are going to get into all of this key information. If you guys want to come trade with me live in real time, link down below in the description of this video. While you're at it, hit that like button and subscribe to the channel. Thank you guys for tuning in. And again, big congratulations if you are living through this moment in time, investing your money in the markets. And the data that we just got actually last month, the month of June, was one of the largest retail inflows that we have seen over the last forever. This is almost a record that we're hitting right now in this market environment. I think it's safe to say a lot of us are going to come out on a much better side of this whole year once the markets actually do start to rebound, as you guys are actively buying the dip, and the data does show that. So I wanted to put that in there. Congratulations. Now let's get straight into all of this information. Okay guys, so first things first, I want to talk about the major events, in which the first one, besides earnings, and we'll talk about earnings in its own segment, is going to be the Fed on Wednesday. The Fed on July 27th, we are expecting them to raise rates by 75 basis points. That will put the federal funds rate in between 2.25% and 2.5%. This is widely known to be that neutral rate for the Fed, in which they are no longer stimulating the economy. They are no longer accommodating the economy. It's supposed to be a neutral rate. So from there, the Fed has been indicating that they are going to raise past neutral, indicating the federal funds rate has to reach 3.5 to 4%. Now, the most bullish thing, and I'll give you guys this in the beginning of this video, for those of you guys that don't want to stick around, don't want to hear the full thesis and all the information, here it is. The bullish thing for this week is if earnings come in okay, like they're not going to be great. Let's prepare ourselves for that. They're not going to be great, but if earnings come in okay and the Fed indicates that they will slow down the pace of rate increases, that would probably be the most bullish outcome for this week. The Fed's not going to stop totally raising rates. That might freak the markets out, because what the hell is coming, down the line if the Fed is stopping raising rates when inflation is 9.1%, core PCE is still over 6%, 3 times where the Fed wants the interest rate to be at 2%. That would freak the markets out. But if they slow down the pace, that is something that could mark a bottom for 2022. So we have the Fed on July 27th. Well, we're going to get bad news on July 28th. This is pretty much already known. The Atlanta Fed GDP Now tracker has an estimated negative 1.6% GDP print coming on July 28th. So the day after the Fed. Now, when you think about this, what happens during a recession? Well, if we go into a technical recession on Thursday, or at least the markets realize we're in a recession, it's no longer a question. 2 negative quarters of declining GDP growth, we are in a technical recession. Well, what typically happens at that moment in time is that you will start to experience deflation. The price of oil will go down. Usually, in a normal market, given what the Fed does, their plan of raising rates, this will affect the bonds a lot. But typically during a recession, bond yields go down, so the cost of capital becomes cheaper. And what actually happens during a recession is that investors will pay more for growth. That is why, as recession fears have been growing over the past couple of weeks, now the bond market even pricing in rate cuts for 2023, you have seen growth stocks outperform. Look at an Apple. They're down 20, or they're up 20% from the lows that we just seen. So a recession can actually mean cheaper money. It can mean less inflation. But then how bad does a recession get? I've said it before, and I'll say it again, a recession only changes the narrative. Now, if inflation just sticks around, the Fed has to keep raising rates, and they're actually like killing growth, we're going into a deep recession. That's the ultimate worst case scenario. But we won't have that information here this week, but we will get indications of that. If we go into a technical recession, and the Fed just keeps saying they're going to have to go more aggressive because inflation's spreading out more, well, that's your shit show. That's your stock market hell week in a nutshell. That's what we're going to be saying on Friday, and that would be what caused the market to go down. Now, earnings, on the other hand, that will also be very important. Now, you have a couple economic data pieces that come out throughout the week. I believe, hold on one second. On Tuesday, you don't have anything for Monday, but on Tuesday, 9 a.m., you have the S&P Case-Shiller Home Price Index year over year. Last time that came out, the markets were hitting new lows, and it was a pretty red day when the S&P Case-Shiller Home Price Index came out last month. You have new home sales. You have Richmond Fed Services Index, Richmond Fed Manufacturing, Dallas Fed Manufacturing. Those might be important. Markets did brush off the last Fed manufacturing data that we did get, which was very bad, And then on Friday, you don't really have anything as well. Michigan consumer sentiment final, but you do have the core PCE, personal spending month over month, and personal income month over month. I think these will really be back burner events because they're on Friday and the markets will be fully reacting to the information that we got throughout the week. Now, a big thing that is very, very important that you guys must know is what is actually happening this earnings season. There is very high earnings expectations for all of your really large cap tech stocks. And what we have for earnings this week, Monday, it's a nothing burger. We really don't have anything. Tuesday starts off the main days, but pre-market, you have UPS, Coca-Cola, GM, GE, and McDonald's, Raytheon Technologies as well. Those will be important for their different industries. Think about industries here. Think about, a Coca-Cola. People probably are not going to stop drinking Coca-Cola. They'll be fine. GM, that will be very important for housing and auto. What kind of demand destruction are we seeing due to the Fed raising rates? And that can affect other stocks like Tesla, other stocks like Ford, right? EV stocks. It will be important for certain sectors. UPS, obviously, that's, online shipping, all that will be important. Tuesday and after hours, you have your first $2 trillion companies, Alphabet, better known as Google, and you do have Microsoft as well. I'm not worried about Microsoft in the same way I'm worried about Google, Facebook, Apple, and Amazon. I think if I were to choose one stock to be in out of all of those, I would definitely be in Microsoft. Microsoft sells a lot of their main revenue, their main products, directly to businesses in their software, right? Their cloud services. They don't really have a big consumer footprint. Xboxes, things like that. It's not where they're generating a lot of their money. It's actually business to business. And a lot of people will just pay up for higher prices at Microsoft before they switch to some other, data provider. So there you guys have that. Google, very concerned. YouTube ad rates are dropping. Pretty much any advertising space, you're seeing ad rates dropping. You're seeing less demand for ads. Kind of worried about them, and not going to lie. Pre-market Wednesday, you have Shopify, Boeing, Spotify, Waste Management, Sherman-Williams, Humana, and Kraft Heinz. Wednesday, after hours, Facebook, Ford, Qualcomm, Teladoc, Etsy, ServiceNow, and QuantumScape. Everyone wants to pay attention to Facebook, but I think, Facebook is already priced for a worst case scenario kind of thing. Facebook on a PE basis, price to earnings, is super, super low. Like a Clorox or really any other value stock is valued much higher than Facebook. Some value stocks are 3 to 4 times the valuation of Facebook. That's pricing in the fact that Facebook's going to lose a lot of money in the future, and their endeavors with VR is not going to pay off for a long time. Now Thursday, that's going to be the real kicker. This is the day I'm most concerned about. Pre-market, you have Tilray, Pfizer, Southwest Airlines, MasterCard, Merck, Hertz, Altria, Peabody, any energy. But Thursday and after hours, Apple, Amazon. Those are the big guys I'm concerned about that I think could really hurt this earnings season. Why is that? Well, if you guys take a look at this is Apple on Yahoo Finance. Why do you think Apple revenue has grown $100 billion from 2020 through the end of 2021, it was largely due to a lot of funny money, a lot of, stimulus that was put out. And, if you got all that free money and you didn't have a phone or you didn't have the Apple product that you wanted, a lot of people I've seen that personally went out and bought those products. Now, what you actually seen from 2018, 2019, 2020 was that Apple was a very stagnant company. They really didn't grow. The revenue stayed about the same, sometimes would be down, 3 to 5 billion, year over year. Same thing with earnings. It goes up, it goes down, but it was pretty stagnant. And that's why Apple was valued, more along the lines of value growth, not really this super high growth company where, the revenue jumped 30% from 2020 to 2021, and 2022 has been pretty good as well as people are running through all that stimulus. So my concern is that if Apple goes back down to 2019, 2020 revenue numbers, the valuation has to come down, and that will freak out investors if that happens. At the same time, we are in a technical recession. At the same time, shit is hitting the fans, for a lack of a better word. Now, Amazon, concerned about the consumer. I don't think people are spending as much money, and that's really what I'll leave that as. Apple is 7% of the S&P, so that is really going to be the main one that could move the markets in a very big way. Now, how AMC fits into all of this, AMC is really going to do its own thing regardless, in my personal opinion, but it could benefit a lot from an uptrend in the markets. Do not be confused by that. I think that's something people forget. AMC probably would perform very well if you've seen a short covering kind of rally if the Fed was bullish. Now, cost bar max, cost bar average is 9.92%. Cost bar max 22.65%, cost bar minimum 8.27%, estimated value of short interest sitting at about 1.65 billion, estimated short interest of free float 18.8%, free float out on loan 27.65%, shares out on loan 142.53 million, 100% share utilization. And what we actually seen Thursday and Friday of last week, days in which it was not very bullish for AMC specifically, well, you've seen a lot of call activity over the past week. 150 orders totaling $15.1 million, positive order value of 58%. But look at this on Friday, 12 orders totaling $2.32 million, positive order value of 95%. These are only options that come up as unusual. Look at this, January 20th, 2023, $25 call, almost 100% out the money. A hedge fund is betting $1.3 million in a call option, where the stock would have to move up almost 100%. Very, very unusual. With only, 5 months left of the year, it makes you kind of scratch your head to, does somebody know something? Why are they so bullish on AMC? And on a technical basis, we're sitting right around that 50-day moving average. We actually did close under that, which is not a great sign, but we're pretty close to it overall. So I wouldn't freak out about a couple pennies if we do make a move back to the upside. I think that would be confirmed as support. If not, worst case scenario, you want to watch these moving averages down here, 150-day moving averages around $13 per share. I think you'd find support there, but I think you'll also find support around 15. But like I said, if we have a terrible week, if the worst possible outcome comes this week, well, that's what you have to be prepared for. Ultimately, in a very solid uptrend still, and I wouldn't get discouraged based off of AMC not holding up a moving average or something. That's really minor in the grand scope of things relative to what's happening this week and how it will affect AMC. Now, the RSI is at 54.66, so more towards that neutral level, which is good. The MACD is now starting to curl down and go bearish. So that is really all I have for this video. AMC will be affected big by an upside move or a downside move. Keep that in mind. Hit that like button, subscribe to the channel. If you guys want to come trade with me live in real time, it's going to be a very exciting week. Link down below in the description. You guys enjoy the rest of your day, and I will see you in the next one.